Before I proceed further, just tell me if you to ask anything from the previous class, and then I'll start with the today's class. Just giving 1 or 2 minutes to you to just think. In the last class, we discussed a few methods, and we also discussed how different cash flows are estimated. So please go through for a minute, and in case you have anything to ask, please ask me, and then I'll start with the class. And today we will be doing some computations. No questions? So then I'll start with the class, and if you can remember from the previous class what we discussed, let me give you a question today wherein we shall be doing calculations from very beginning. We will have information, and I have put that in Excel so that I can easily find out and I can do this with you, right? So I'm sharing my screen for you so you can see and then you can find out. Let me share my screen. Is my screen shared?
Yes, sir.
So please appreciate the fact that we people are doing capital budgeting, which are long-term decisions that have the capability to affect the profitability, the revenue earning capability of the firm. All or most or the major part of the investment is going to happen today in the beginning, and the cash flows that will accrue to the firm will happen in future. So estimation has to be done carefully, and these estimations, if not done carefully, would actually lose the value of the firm as compared to creating value of the firm. So this is the basic detail of the question. There is a plant that costs rupees 5 lakhs. This plant will be there for 10 years with us, and by purchasing this plant, our production capability will go up. That will require additional investment in working capital by rupees 1 lakh. At the end of year 10, this plant can be sold off, and the scrap value will accrue to us, that is rupees 10,000, and when I'm using word us, it means to the firm. Per year, this plant can produce 25,000 units. That's the maximum capacity it can produce. And I'm just not using this WDV method and all. I'm just using the simple method. So rate of depreciation I'm not giving to you. We'll use the straight line method. The plant is depreciated using, so I'm just making it to method of depreciation. Of depreciation is SLM. Straight line method is the method of depreciation. The required return is 20% per annum, and the tax rate applicable to the firm is 40%. I'm just sharing these basic details with you. And based on these, we have to determine 3 kinds of cash flows. Number 1, the initial cash outflow. Who will determine the initial cash outflow and tell me what should be the initial cash outflow here? What is the initial cash outflow?
5 lakh.
Sorry, bache?
Cost of the plant.
Let me have my earphone. Just give me a minute. It's a bit difficult to hear. Just give me a minute. The best I could hear was rupees 5 lakh. Is there anyone else who has some other idea?
Rupees will be 6 lakh. 6
6
lakhs.
lakh.
6 lakhs. Yes. 6 lakh
Plus
is
in
the right answer. Now, if you can recall what we said, the initial cash outflow is cost plus installation expenses plus
So working
plus
capital.
change in working capital. If there is a decrease, it will be subtracted. If there is increase, it will be added. Let me add this. Right. Then, if there is an existing asset, then sales price of that replaced asset. But this will happen only in case of replacement. Minus or plus what we subtract is tax on capital gain. If there is capital gain, and if there is a capital loss, then we subtract it. Right? So the net effect what we get is our initial cash outflow. Here, if you look at, no information about installation expenses given to us. Change in net working capital is given that it will increase. So out of my pocket, 5 lakh rupee will go in the form of cost of the asset, and working capital के form में I will have to invest rupees 1 lakh. There is no existing asset that is supposed to be replaced, and there is no tax happening on because I'm not selling it. So no capital gain and no capital loss.
एक्सक्यूज मी सर
Yes.
सर जो ये टैक्स रेट है ये क्वेश्चन में ये कैपिटल गेन पर है या मतलब अच्छा ये मतलब उस पे है ओवरऑल है
जनरली कैपिटल गेन पे अलग से टैक्स रेट और उस पे हो तो अलग अलग बता देते हैं, नहीं तो आपको आप सही मान सकते हैं. ठीक है.
और सर हमें कैपिटल गेन होगा तभी तो हम टैक्स पे करते हैं ना, अगर लॉस हो तब भी करेंगे.
इन द लास्ट क्लास आई एक्सप्लेन दिस. आपको याद है आपकी इनकम स्टेटमेंट?
यस सर.
क्या होता था उसमें? ये आपकी इनकम स्टेटमेंट है, दैट इज प्रॉफिट एंड लॉस अकाउंट. And these are the particulars: debit amount, particulars, and amount in rupees. Now suppose you have gross profit of rupees 20 lakhs. Okay. And you have all indirect expenses together. So office and administration expenses, right? So office, admin, and selling expenses. And these amounts to, let's say, 1,50,000. So what is your net profit? 50,000.
50,000.
Right. Now assuming no other deductions, nothing else. So what should be your tax liability? The tax liability will be, now this becomes 20 lakhs. And this becomes 20 lakhs. Account closed.
sir, excuse me, sir.
बस एक सेकंड बच्चे, सिर्फ एक सेकंड, right? Now you tell me, what should be the tax liability? 20,000. Now, suppose due to selling an asset, You incurred a loss. So where do you transfer the loss? Where do you transfer the loss?
Sir, on the debit side.
Right. So loss on sale of asset. Let's say there was a loss of rupees 20,000. Now what is the tax liability? What is the net profit now? The new
30,000.
Sir,
30,000.
30,000.
So what should be the tax liability now? 12,000.
12,000.
Earlier you were paying how much? 20. And now you have, earlier you were paying 20,000. Now you are paying 12,000. Are you saving rupees 8,000? Yes or no?
Yes, sir.
This 8,000 in any ways what your outflow. Whether you take this decision or you don't take decision, this 8,000 was an outflow. But because you are taking this decision, you are incurring a loss, and that loss is reducing your overall profit and ultimately making savings on taxes. Got it?
Yes, sir. Thank you.
Right. हाँ जी. Yes, somebody wanted to say something. और थोड़ा quickly अपने questions पूछो क्योंकि time थोड़ा कम है हमारे पास है ना? पूछ
Sir,
please.
it's clear now. Sorry for disturbing.
नहीं sorry वाली बात ही नहीं बच्चे. आप you have every right to ask every question, and I will try my level best to answer it without any problem. ठीक है? So don't feel sorry. You have every right to ask a question. So here, हाँ जी.
तो जैसे हम यहाँ पे इनिशियल कैश आउटफ्लो ले रहे हैं, सो अगर कैपिटल गेन होता है तो उस पे तो हमें टैक्स ज्यादा पे करना होगा, तो फिर वो तो हमारे आउटफ्लो में ऐड नहीं होना चाहिए.
तो आउटफ्लो में ऐड करेंगे ना कैपिटल गेन टैक्स. चलो लेट अस टेक एन एग्जांपल. बस समझ नहीं आएगा. सपोज यू वांट टू बाय अ मशीन.
सर, आपने ना सब्ट्रैक्शन का साइन लगाया हुआ है.
सॉरी
सर, आपने सब्ट्रैक्शन का साइन लगाया हुआ है इन द फॉर्मूला.
Oh, हाँ. Yes. It has to be plus, and here it will be minus. Yes, it is reverse. Thanks.
So now it's clear.
Right. So it is clear. Can I leave it now?
Yes, sir.
जो कैपिटल लॉस पे टैक्स होगा वो तो हमारा माइनस होगा ना. आपने
नहीं
जो ब्रैकेट में कैपिटल.
Right, you are right. Well, the whole confusion was because the sign. But please appreciate the fact you are trying to determine the cash outflow. Outflow means that is cash going out, right? So you want to determine the negative flow of the cash, right? So anything that is coming in, that is accruing to the firm, should be a subtraction out of it, and anything going out or flowing out which is to be paid by the firm has to be added to it. Therefore, if there is a capital gain, this tax will be outflow, right? And what are you trying to determine? Cash outflow. So in this outflow, this gain on capital tax on capital gain will also be an outflow. Now, if there is a loss, then your outflow is happening. Let me take an example that will elaborate better. Okay. So we are buying a machine, and the last question I'm doing on estimation of initial cash outflow, and I will have all kinds of adjustment in it. There is a machine worth rupees 5 lakhs, right? Okay, and installation is expected to cost rupees 50,000, right? Now there is an existing machine. Is an existing machine with book value rupees 50,000 expected to be sold for rupees 1 lakh. So book value is 50,000. So we have depreciated it to the tune of rupees 50,000. That's the written down value of the asset. But if we sell it in the market, it will have rupees 1 lakh. Okay. Now, earlier existing level of net working capital is rupees, let's say 2,50,000, and we are expecting that the new level of working capital, investment in net working capital, because net working capital is something we invest into, right? That is expected to rupees 3,50,000. Okay, so these are the figures based on which we have to estimate where tax rate is, let's say 30%. We have to estimate what is my initial cash outflow. Now think like what is going out of your pocket and what is coming in your pocket. So just think like that. Okay, so if you think like that, then how will you proceed? Let's see. First, what is the cost? Because this you have to pay. Cost is rupees 5 lakhs. Okay, now installation also has to be paid. So just add this also. How much amount? Rupees 50,000. Okay, then there is a machine that worth rupees 50,000 in our books, but when I will sell, I will get rupees 1 lakh from the market. So if I buy this asset, this machine is not required. This machine will be immediately replaced because just one machine is enough for me. Now, if I buy this machine will be sold off. So to buy this machine, which requires 5 lakh rupee, 1 lakh I can arrange from selling the existing machine. So how much is additional required by me? Only 4 lakhs. This means this 1 lakh is cash inflow for me, right? So subtract it minus sales proceeds of existing machine. That's rupees 1 lakh. So this you are minus, you are deducting, right? Why are you deducting? You very well appreciate now that you need total 5 lakh and 50,000 for this machine, but 1 lakh is arranged by selling of the old machine. That means out of your pocket how much you need? Just 450 as an outflow. However, there is a catch on it. The book value is 50,000. So every time you claim depreciation, you post that depreciation to income and expenditure account, and you have claimed that you have claimed tax advantage on that, tax relaxation on that from the tax authorities. Therefore, now you are making a capital gain, so the authorities will say that you will have to pay extra forward for this capital gain. What is the capital gain? 50,000. So your capital gain amount is rupees 50,000, which is 1 lakh minus 50,000. Okay. Now you are in tax bracket of 30% for all kinds of, I'm assuming all kinds of taxations. So that means you will be paying tax at the rate 30%. That is rupees 15,000. So however, by selling this asset, you will be receiving 1 lakh, but you will be paying 15,000 as taxes. So net cash inflow to you is just 85,000. So add this. Tax on capital gain. Had this been a loss, so you would have saved taxes. And saving taxes is a kind of inflow. So we would have subtracted it from here. So this amount is what? Rupees 15,000. Now look at what happened to net working capital. Earlier, with the existing machine, I was using, or I had invested in inventories, debtors, and cash, rupees 2,50,000. But new machine will require an expected level of net working capital investment to the tune of 350. So out of 350, 250 is already there, invested. So what is the increase? 1 lakh. So this means 1 lakh I need to invest additional. Okay. So this is increase in net working capital, rupees 1 lakh. So what is your initial cash outflow? Your initial cash outflow is the net amount, which is rupees 5,65,000. So what happened? 5 lakh plus 50,000 made it to 5,50,000. That you need to pay to the vendor immediately. But you will have 1 lakh rupee as inflow by selling the existing machine. So net outflow is 450. But you will have to pay 15,000 on taxes, so 465. And 1 lakh you need to invest in working capital, so it's 565. So this is your net cash outflow that's initially happening to you. I hope this must be clear to everyone. Can I assume that?
सर दिस इज क्लियर, बट मैं कह रही थी कि यहाँ पर जहाँ पर आपने ये फॉर्मूला लिखा है ना, कैपिटल लॉस में ब्रैकेट में माइनस का साइन होना चाहिए प्लस की जगह, कैपिटल गेन में।
कैपिटल गेन में तो प्लस ही है।
नहीं, कैपिटल लॉस के लिए जब कैपिटल लॉस होगा, टैक्स ऑन कैपिटल लॉस, तो ये माइनस होगा ना।
हाँ, वो रिवर्स होगा ना, कैपिटल लॉस में गेन का रिवर्स होगा। यू आर राइट, वो रिवर्स होगा।
ओके सर, थैंक यू।
राइट, वो कई बार क्या होता है, फ्लो में लिखते लिखते कई बार गड़बड़ हो जाती है, लेकिन आप आइडिया समझो। यू जस्ट ट्राई टू अंडरस्टैंड द लॉजिक कि व्हाट इज द लॉजिक विद व्हिच यू आर डिटरमिनिंग द अमाउंट। ठीक है, दैट्स मोर इंपॉर्टेंट। ये लिखना तो कभी कभी हो सकता है कि कोई मिस्टेक हो। थैंक्स फॉर करेक्टिंग।
हाँ जी, हाँ जी सर, थैंक यू।
राइट, सो आई होप बाय नाउ you can determine what should be the outflow. So here, cost of the plant is 5 lakh, an increase in working capital is 1 lakh. So ultimately we will be having rupees 6 lakhs as initial cash outflow. I hope किसी को problem नहीं होनी चाहिए यहाँ पे. Can I proceed further?
Yes sir.
Yes sir.
Right. Now I need to determine one thing here for the cash flow estimation, and that is depreciation. What is the depreciation amount per year? As you know, depreciation is determined by, how do you determine the depreciation? Cost. अब ये cost की definition क्या है? Any amount spent before, वही definition है जो accounting में होती है. Any amount spent before the asset is put to use. So depreciation is an accounting concept. So this is relating to that. Which concept? The accounting concept. So cost, if there is installation expense, then plus installation expense, minus scrap value, divided by the whole expression, which is the remaining amount. Life. This has to be divided by the life. So this is the formula for depreciation. Now there's a difference in the two questions. Number one, the question with which we are dealing has no installation expenses. So what will be the depreciation amount? It will be equal to 5 lakhs minus the scrap value rupees 10,000 and divided by the life of 10. So that will give me an amount of rupees 49,000 per annum. Rupees 49,000 per annum. Here there is a difference. In this question, if you can see, rupees 5 lakh is your machine cost and 50,000 is your installation cost. So the total cost of the machine is 5,50,000. So here the depreciation amount calculation will be that cost of this will be 5,50,000. Now based on whether scrap value is there or not and what is the life of the asset, we will determine the depreciation amount. So we determined here that the depreciation amount is actually rupees 49,000 per annum. I hope it is clear to everyone.
Yes, sir.
Yes, sir.
So we have determined number one, the initial cash outflow. We have also determined what is the amount of depreciation per annum, and please appreciate the fact that depreciation is a non-cash expense. Because of this expense, neither the cash flows out nor the cash flows in. Because of this expense has already happened when you acquired the asset. So this is non-cash, but it is very important because it allows us to save on taxes, and the tax saving it makes is called NDTS. NDTS. There are two kinds of tax saving instruments. One are ITS, that is interest tax shield. Interest tax shield. When you raise your finances through debt, you pay interest, and that interest is chargeable for taxation. So whatever interest you pay out, you can save taxes on them. Whatever savings you make, that's known as interest tax shield. Now all tax savings which are due to the reasons other than debt are called NDTS, that is non-debt tax shield. So the tax savings that we make because of depreciation and amortization and all, we know them by a term NDTS, non-debt tax shield. So there are two kinds of instrument we group broadly. One, those which are debt instruments, and because on them we are paying interest, we are saving taxes, and whatever tax saving we are making, that's known as interest tax shield. Shield is what? That saves. Okay, and all those instruments or all those things, all those attributes or characteristics of your firm that save taxes other than this are non-debt tax shield. And this is important for decision making for finances. That is to determine whether your financing pattern will affect your valuation or not. But that discussion we will do some other day, not today. So I hope you understood this, and let's proceed to the next component. Now let's estimate the cash flows. Let's estimate the cash flows. And what is happening in the cash flows? There are 10 years, and intentionally I have made this question a bit elaborative because the number of classes are limited. So I want कि एक ही question में most of the things are covered, right? So we have assumed that now you remember what your asset can do. Your asset can produce maximum 25,000 units in a year. So इस क्वेश्चन में थोड़ा सा फ्लो है. 25,400 का भी एक अमाउंट शो कर रहा है कि इट कैन बी सोल्ड. वो हो नहीं सकता. So आप इसको हटा दीजिए. Now it is that initially, because in first year I'm not expecting that all the we will be working on the full capacity and utilizing it and selling it, because time लगता है ना. So we are assuming here that in the first year only 80% capacity will be produced and sold. This is expected demand, which we will be, मैं थोड़ा easy कर देता हूं इसको, right? Expected unit. Yeah. Expected sales unit. So we are expecting that in the first year we will be able to sell 20,000, in the second year 22,000, in third year 24,000, and then onwards for the rest of the years we will be able to achieve the full capacity utilization. So we will be able to sell full 25,000 units only after 4th year onwards, right? And now because every year,
Excuse me, sir.
yes,
Sir, my connection was lost. तो सर आपने ये मतलब ये वैल्यू जो लिए कहाँ से लिए? ये आपने खुद एक न्यू
estimations,
क्वेश्चन है?
estimations है, ये मेरी estimations है.
Okay, sir.
Depending on the market conditions, I am assuming that these are the units I will be able to produce and sell. So if I can sell 20,000 units, my production will be around 20,000, 22,000, 21,000, depending on what is the inventory policy and all. Right? Number one.
Okay,
Number
sir.
two, because my plant cannot produce more than 25,000, so for decision making only 25,000 units remain. हो सकता है market में 35,000 की demand हो, but अगर 35,000 की demand है, then I will have to install additional plant capacity, because the existing can produce only to the tune of 25,000 per year. So I cannot go beyond this capacity. इसलिए थोड़ा सा चेंज कर दिया मैंने, और मैंने इजी कर दिया, बिकॉज फर्स्ट क्वेश्चन है उसमें बहुत सारी कॉम्प्लिकेशन हो जाए तो फिर आप कंफ्यूज ना हो जाओ, इसलिए मैंने थोड़ा ईज आउट कर दिया. एक और चीज, जनरली क्वेश्चन में प्राइसेस आर गिवन कि सेम प्राइस थ्रू आउट द ईयर, बट जनरली होता नहीं है ऐसा. Every year the price keeps on varying. So we are assuming that for the first 5 years the price will remain stable, but beyond that it will rise. So this is the per unit selling price we will be able to do, and this is variable cost per unit we are able to make, and this is nothing but 60% of the variable cost, the sale price. आप चेक कर लो, सब 60% के फॉर्मूले से मैंने कैलकुलेट किया हुआ है, ये देखो. So we are assuming कि variable cost is 60% of the sales price per unit. ये सब per unit basis पे है. And now I have to do the cash flow estimations. Okay, let us make the cash flow estimations. Because मेरे पास बोर्ड नहीं है अभी, तो मैं एक्सेल में कर रहा हूँ. बोर्ड होता तो आपके सामने मैं मैनुअल कैलकुलेशन करता. But I hope you will still appreciate कि वो हो कैसे रहा है, and you can understand how it is happening. Cash flow estimations. What should be the sales? Sales means sales revenue I am talking about. So what will be the sales revenue? Sales revenue will be number of units sold multiplied by per unit selling price. इसका मतलब क्या होगा? अब मैं एक्सेल में यूज कर रहा हूं तो it will save some time, and since this is getting recorded, later on you can slowly watch it and you can do manually on notebook, because you will not have the facility of Excel in your exam. So I'm simply multiplying the number of units sold in a year with its per unit selling price. So that means the total sales I'm going to make in year 1 is rupees 2,40,000. Year 2, year 3, year 4 and year 10. I shall be able to make this much of sales. 264, 288, 3 lakhs, 3 lakhs. एंड देखो यहाँ पे फुल यूटिलाइजेशन कैपेसिटी हो गया. अगर प्राइस वेरी नहीं करता तो इन to I'm able to generate more revenue, but more revenue can be generated with additional cost. So cost भी है ना, variable cost. How will you determine the variable cost? Sales price is, what is sales revenue? This is sales price per unit multiplied by quantity sold. So this is how we are determining what is our sales price. How will you have the variable cost? Variable cost will be variable cost per unit multiplied by the quantity sold. So this is going to be determined like number of units sold multiplied by the per unit selling price. Okay, per unit variable cost. Now if I copy it to my right, before this, you must be remembering how we determined our, क्योंकि जब तक वो याद नहीं रहेगा, I think you will not be able to appreciate it that much. So we are trying to determine the annual cash inflows, right? Or subsequent cash inflows. It could be outflow also. If it is negative figure, it can be outflow also. So what are we trying to do? First is we are taking the sales revenue. From the sales revenue, we are, subtracting the variable cost. And from sales revenue, if you reduce the variable cost, what you get is contribution margin. So that's contribution margin that we will be able to get here. From the contribution margin, we have to subtract our fixed cost. And this fixed cost can be cash as well as non-cash, right? Generally, it can be cash also, and it can be non-cash also. So we have to subtract both. Generally, the non-cash expenses are depreciation. And in this case, so it will be depreciation, right? Okay. So can I write instead of non-cash or with a dash, depreciation basically? Depreciation, amortization or something like that. अब ये आपको ये ना लगे कि this is a minus sign, so I'm just writing it like this way. So with non-cash, here my intention is to tell you that I have to subtract depreciation. So from contribution margin, if I subtract this, what I get is EBIT, earning before interest and taxes. So it is equal to earning before interest and taxes. Now, because interest is, component of financing cost, so we are not going to bother with this interest here. We are just trying to find out what is the revenue earning capability and the profitability of the asset that we are going to purchase. This could be financed through equity. This could be financed through debt. I'm not more interested in that. I'm more interested in what is the capability of this particular asset. And therefore, I'm not going to take this interest in consideration. And I'm simply saying it is nothing but EBT, earning before tax. Popularly, you call it what? PBT, profit before tax. You also call it profit before tax. So this gives me my profit before tax. Why? Because interest is not to be considered in capital budgeting decisions. The simple logic is there are three decisions that we take: financing, investment, and dividend decisions. Now, all three are theoretically, though practically they all are interlinked, but theoretically for analysis purpose, we treat them as independent of each other. So we believe that these three decisions are independent of each other, right? And therefore interest is not to be considered over here. Then what we do, we subtract from here the taxation, whatever the tax liability is. And what do we get here? After taxes, we get profit after tax. So profit after tax, or some people call it earnings after tax. क्या फर्क पड़ता है profit after tax को या earnings after tax को? So this is your profit after tax, but this profit is not cash profit. I can assume that everything is happening here in cash. No change in working capital. Nothing is happening over there. I can assume that. Fine. You assume. No problem. But even with those assumptions that my entire sales revenue is in cash, entire variable cost payment is in cash, and if there is a credit, then it is settled in such a way that there is no change in working capital investment. Neither there is a decrease in working capital, nor there is increase in working capital, right? So if this is cash, this contribution margin is also in cash, but this depreciation component in any case cannot be cash. This means every other thing may be cash, or maybe in such a way that it is not affecting the the net working capital, but still this profit after tax is not cash because of the depreciation component. This depreciation we added here, we subtracted here so that tax liability can be reduced. And now we have here, we have to determine cash flow after tax, which is after adding back the depreciation amount. So what do we get finally? We get cash flow after tax. Just for sake of simplicity, I'm assuming no capital expenditure and no change in net working capital. If there is any change in net working capital, an increase will be cash outflow, and I'm trying to determine inflows. So from inflows, an increase in cash outflow in the form of increase in net working capital should be subtracted, and a cash inflow in the form of reduced working capital should be added back. So adjustment for net working capital has to be done. In the previous class, I explained it in detail, right? Here I'm assuming that because there is no other adjustment, whether capital expenditure adjustment or whether there is change in net working capital. So I can assume that this cash flow after tax is my free cash flow as well, right? Okay, so this is my annual cash inflow. Now let's understand it here in an equation form. What is my cash flow after tax? My cash flow after tax is sales revenue minus variable cost minus fixed cost, that is depreciation, right? Minus depreciation into 1 minus tax into 1 minus tax plus depreciation. This is what I got. If you can see this, क्या हुआ? This is sales revenue minus variable cost minus depreciation. This gave me my EBT, PBT, whatever. Then I subtracted taxes. So this is 1 minus tax rate. This is my profit after tax. Now when I add by depreciation, this is my cash flow after tax. Now I can rearrange this. मैंने आपसे कहा है कि आप सिर्फ ऐसे मत पढ़ो कि आप एक कोर्स कर रहे हो, आप उसको ऐसे पढ़ो कि आपको कुछ करना है, राइट? सो कहना ही मतलब आपको लॉजिक समझना है, अंडरस्टैंड द लॉजिक. कैन आई रीअरेंज लाइक दिस? कोई प्रॉब्लम नहीं है. This 1 into 1 minus tax rate, I multiplied this with this and I multiplied with this. So I just rearrange like this. Okay. Now what I can do, cash flow after tax can be determined like sales revenue minus variable cost into tax rate, और यहां पे मैं प्लस डेप्रिसिएशन बाहर ले रहा हूं. So if I take plus depreciation out, अंदर क्या बनेगा? -1 plus tax minus depreciation. That's one. Nothing serious. You take depreciation out, so this is +1, this is negative. So this multiply with this becomes minus and this becomes plus, right? Okay. Now from 1 to +1 to -1, ये तो प्लस ही, हाँ ये तो प्लस रहेगा. From +1 to -1, this gets cancelled, and what are you left with? Cash flow after tax is equal to sales revenue minus variable cost into 1 minus tax rate plus depreciation into tax rate. ये जो depreciation into tax rate है ना, depreciation into tax, this is what we call depreciation tax shield. This much taxes are saved every year. This much taxes are saved. Okay, or you call it, either you call it depreciation tax shield or you call it non-debt tax shield. कोई एक ही बात है, hardly matters, because of the reasons that are non-debt, not related to debt, they are known as what? Non-debt tax shield. So this portion is depreciation tax shield. So I can simply ignore every other thing and I can simply say that if I want to determine my cash flow after tax, just take the contribution margin, subtract taxes and add tax saving every year. Every year I'm going to make a tax saving of this amount, depreciation into tax rate. So larger the depreciation amount, the larger the tax rate is, the larger the tax saving is, right? Okay. I hope this equation is clear to everyone. Am I right? Can I assume that?
यस सर।
ये सर अगर इसमें हमारे कैपिटल गेन होता तो फिर एडजस्टमेंट होता तो हम वो हमारा जो हमने पहले इनिशियल कैश आउटफ्लो में करा था वैसे ही होता।
सर कैपिटल गेन कब होता है बच्चे? जब हम एसेट को बेचते हैं।
नहीं सर, वो सॉरी, नेट वर्किंग कैपिटल वाले एडजस्टमेंट।
हाँ यस 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 यस, अगर
Okay.
नेट वर्किंग कैपिटल में कोई चेंज होगा तो वो मुझे एडजस्ट करना पड़ेगा यहाँ पे, और यहाँ पे ऐड या लेस करना पड़ेगा लास्ट में। बट
Okay,
दिस
sir.
इक्वेशन, द होल इक्वेशन आई शोड यू जस्ट टू शो डेप्रिसिएशन टैक्स शील्ड, कि ये डेप्रिसिएशन कर क्या रहा है। दिस डेप्रिसिएशन इज डूइंग नथिंग बट सेविंग टैक्सेस, दैट्स इट। बाकी ये हो ना हो कोई फर्क नहीं पड़ता। देखो क्या है आपका अल्टीमेट, दिस पोर्शन इज शोइंग योर रेवेन्यू अर्निंग माइनस टैक्स, दैट्स इट, दिस इज योर प्रॉफिट, बट बिकॉज ऑफ डेप्रिसिएशन इट इज सेविंग टैक्सेस। तो वो हो क्या रहा है, once we are subtracting and then we are adding back, by subtracting and adding back क्या हो रहा है ना कि number of times students ask why are we subtracting and why are we adding back, so by subtracting and adding back we are doing nothing but saving taxes, we are making depreciation tax shield. Yes please.
Sir, it will be more clear.
People call it DTS also. हाँ जी बच्चे क्या कह रहे हो?
Sir, it will be more clear if you take some example and then compute that.
Okay, I'll do it, don't worry. Okay, right, when we will be doing the cash flow estimation I will do it. Okay, now abhi karunga. So what I will have the contribution margin, my contribution margin will be sales revenue minus variable cost. This is my contribution margin. What is the depreciation amount? Depreciation amount is 49,000. So I'll subtract my 49,000. So what is my profit before tax? My profit before tax is contribution margin minus my depreciation amount, that is 47,000. What is the taxes? Tax I have to charge at the rate 40%, that is what is said. So I have to charge taxes at the rate 40%. Just a minute. So this is equal to whatever the profit before tax is multiplied by 40%. So this means 47,000 if my profit before tax it is, then I will be paying a tax value of 18,500. What is profit after tax? Profit after tax is profit before tax minus the tax rate. So this is profit before tax minus the taxes that are paid. So I will be making sales of 2,40,000, but 1,44,000 I will have to make variable cost. So the net contribution of these sales will be 96,000, out of which 49,000 I have to recover towards my fixed cost that I initially made. So that's worth rupees 49,000. What is profit before tax? 47,000. On this 47,000, the tax value will be rupees 1,88,000 and the profit after tax will be 28,200. एक यूनिफॉर्मिटी मेंटेन करने के लिए लेट मी हैव दिस, हाँ यूनिफॉर्मिटी रहेगी ना, माइनस हो रहा है तो आपको दिख जाएगा यहाँ से सीधा सीधा. What is the cash flow after tax now? The cash flow after tax is PAT plus depreciation. What is cash flow after tax? It's PAT plus depreciation. So what is PAT? 28,200. इसमें add करना है मुझे depreciation. So let's add depreciation. So total cash flow after tax is 77,200. We are assuming no adjustment for working capital, no adjustment for terminal cash flow, and no adjustment for capital expenditure. So what is my free cash flow? My free cash flow is equal to cash flow after tax. So हम कुछ और मान ही नहीं रहे. We are not assuming any other thing. अब ये मैं क्या कह रहा था इससे अब समझो. Instead of doing all these calculations, I could simply find it out like this. कैसे? The difference between or the whole long calculation can be shortened by using this expression. कैसे? Let's check. What is my sales revenue? So I am determining my cash flow after tax, जिसमें कोई change in working capital नहीं है, कोई capital adjustment नहीं है. So what is my sales revenue? My sales revenue is 2,40,000 minus what is variable cost? 1,44,000. Right? Multiply it directly with 1 minus tax. What is 1 minus tax? 1 minus tax is 1 minus 0.4. 1 minus tax means what? This is profit after tax. But this is profit after tax if depreciation is 0. But the depreciation is not 0. Since the depreciation is not 0, it will save taxes. So just add the saving of taxes into it. How much is the depreciation amount? 49,000. What is the tax rate? 40%. So this much of taxes will be saved by the depreciation. Now, if I calculate, this will exactly be equal to what you determined as cash flow after tax, 77,200. I hope now you appreciate and you understand what I'm saying. Is this clear with the example?
Yes, sir. Yes, sir.
Right. So आप अब समझ गए कि इस depreciation का role क्या है? The role of this depreciation is to save taxes. That's it. Okay. Can I proceed further now?
सर
Yes.
सर हम एग्जाम में फिर डायरेक्टली ये वाला फॉर्मूला लगा के अप्लाई कर सकते हैं या फिर हमें वो पूरी टेबल शो करनी पड़ेगी?
अगर जो एनुअल डेटा कांस्टेंट है, जैसे whatever is the information here is same for all through 10 years, कोई जरूरत नहीं टेबल बनाने की, आप सीधा कर दो, no issues. Otherwise, if you feel comfortable, you make the table, hardly makes a difference. Okay.
Okay, sir.
Now I'm doing it for the rest of the cells. I'm doing it for rest of the cells. So now we have different free cash flows happening. 77,000, 82,960, 88,720 and so on. अच्छा, ये कैलकुलेशन करने में टाइम मुझे क्यों नहीं लगा? बिकॉज यू नो एक्सेल यूज कर रहा हूं तो कुछ तो एडवांटेज होगा ना. सो दैट एडवांटेज आई यूज्ड हियर, राइट? ओके. सो दीज आर द डिफरेंट ईयर्स कैश फ्लोज दैट आर हैपनिंग एंड हाउ टू यूज. एक चीज और रह गई अभी. क्या रह गई? Go to the basic and it says what? Now cost of the plant is 5 lakhs. 10 years is the life. So आज क्या cash outflow होगा? We determined it is 6 lakhs. 10 years तक कितने annual cash flows होंगे? We determined this. And now I have to determine the third kind of cash flow, which is terminal cash flow. Terminal cash flow is when the project's life is coming to an end. So we want to determine what should be the cash flow happening then. So in that year, the annual cash flows will also happen. That's a 1,21,600 is due to my operations. So due to my operations, these cash flows will definitely happen. Along with that, some additional cash flow will happen. And what is that cash flow? See, I will be selling it as a scrap. How much is the scrap value? 10,000. This is cash inflow because I will be receiving it. The terminal cash flow may be outflow, may be an inflow. Suppose there is an environment hazardous product or machine. or some equipment like the computer equipments and all, when you try to dump it, you have to pay for it. So in that case, it could be as good as cash outflow. But in this case, it is saying that once the life of the asset comes to an end, it will give us a scrap value of 10,000. Now I need to determine whether there is, and this is inflow, please mind it, this is inflow. Now I need to determine whether there is happening some capital gain or not. What is the book value? 10,000. What is the scrap value? 10,000. No capital gain, no capital loss, and therefore no adjustment for tax on capital gain and capital loss. But suppose there would have been, suppose the book value is 10,000, but we are able to sell it in the market for rupees 20,000. Now there is a capital gain of rupees 10,000. अच्छा ये सेम अमाउंट हो जाता है तो आप कंफ्यूज हो जाते हो, तो मैं इसको 30,000 करता हूं, just to remove the confusion. Now there is a capital gain of 20,000. So this is cash inflow happening to you, but because due to this there is a capital gain, you will have to pay taxes. So what will be tax on capital gain? 40% of 20,000, that is rupees 8,000.
सर ये बुक वैल्यू क्वेश्चन में गिवन थी हमें 10,000.
हाँ वो तो गिवन है ना कि आपने क्या किया. It says that the salvage value will be rupees 10,000. So you depreciated your asset only to 4,90,000. Per annum 49,000 you depreciated. So in 10 years how much you depreciated? You depreciated 4,90,000. तो book value कितनी बची? 5 lakh की asset है. 4,90,000 you have depreciated. So the book value is 10,000. So given or not is hardly matters. You can determine it directly. This is assumption. I'm assuming that suppose I'm selling it for 30,000, because within one question I want to explain all types of possibilities. क्योंकि बहुत सारे क्वेश्चन करने का स्कोप नहीं है हमारे पास, right? Now, had the sales proceed of the scrap value been rupees 30,000 to us and book value rupees 10,000, I would have gained by 20,000 in the form of capital gain, and therefore it would have attracted 8,000. Now understand, this is inflow, but this is outflow. So what will you do? Subtract. Now please don't get confused with initial cash outflow. यहाँ आपने कहा ये क्या किया आपने? Here तो you are adding tax on capital gain. Here you are deducting capital gain. See, here you were determining outflow. So this money is also going out and this tax is also going out. So both are going out. Both directions are same. So they will get added. Here the direction is different. This is inflow and this is outflow. So from inflow, the outflow has to go out. So we will subtract. Please mind the direction of the cash flow. Okay, so this will be subtracted. Now what is happening? It is assumed that if once the project is over, we will reverse back to our original position. We will reverse back to original position. What is the investment in net working capital? You have bought some raw material, you have put some cash, you have sold on credit. So there is a cycle. After some days, this money which gets converted into raw material, into inventory, into sales, again gets converted into cash. This cycle keeps on continuing. But once this project life is coming to an end, this cycle needs to stop. So that means whatever cash outflow you assumed here in the beginning of the year, at the end of the life, this becomes your cash inflow, because this here you invested. Once the project is over, you are reversed back. So this is release. Once this gets converted into cash, this is available for investment elsewhere because this project is now over. So any release of net working capital will be added. And that's rupees 1 lakh. This will be your terminal cash inflow. However, in this basic question, this situation does not arise. The scrap value is 10,000 and no other information is given about the sales value. So we will presume that sales value and scrap value both are same. Next, because both are same, no capital gain or no capital loss. But yes, what is happening is that the working capital will get released because this we will not need it anymore, right? So what is the amount which will happen in the form of cash inflows? Rupees 1,10,000. So in the 10th year, we will not only have the annual cash inflows, but also we will have terminal cash inflow of rupees 1,10,000. Please mind it, it could be outflow also, depending on the situation. So total cash inflow that will happen in the 10th year will be equal to the profit cash flow after tax plus terminal cash flow. So total amount will be 2,31,600. These are the free cash flows happening to us. Let us now evaluate the project. And let us evaluate the project based on these parameters. What is NPV, what is IRR, what is PI, and what is MIR, and what they do. If you have to ask anything from cash flow estimation, please ask before I proceed further. Please ask.
सर ये टर्मिनल कैश फ्लो के नीचे FCF का फुल फॉर्म क्या है, एक बार दोबारा बता दीजिए.
Free cash flows.
Okay.
Free cash flows. Investment that you will be making will be for what? Free cash flows. Acha, whatever question you have done till now in your VBCom, you have made an assumption inadvertently without knowing that you are making an assumption. क्या होता था? After you added depreciation back in all your questions, you would have said this is my cash flow after tax and I'm going to take decision based on these cash flows. यही करते थे ना?
Yes, sir.
So
Yes,
you were assuming without actually knowing the fact. You were assuming that there is no change in net working capital and there is no change in capital expenditure. Nothing else is happening. हाँ, ये भी आप consider करते थे. So you would have done this plus this. Here I have just given you the fact that it is the free cash flow that you invest, and this is achieved only after making adjustment for net working capital and terminal cash flows. अगर एग्जाम में चेंज इन नेट वर्किंग कैपिटल नहीं है, सो नो नीड टू डू इट, लीव इट. यहाँ लिखने की जरूरत नहीं है. You can assume the same way, but conceptually you should know that what you are doing or what you are dealing with. Okay, right? ये कैश फ्लो तो इन एनी केस आप कंसीडर करते ही थे, पहले भी करते थे, अभी भी करोगे. Yes.
Excuse me, sir.
Yes, I'm waiting for you.
So can you please explain capital gain once more?
Yeah, initial and कैश फ्लो में जो कैपिटल गेन हो रहा है वो मुझे भी नहीं समझ आया, वो किस तरह का है.
Okay, please understand this example again. Okay, and now compare both. What are you trying to determine here? You are trying to determine here what is my initial cash outflow. You are trying to determine what is my initial cash outflow. That is how much out of pocket I have to invest. Any confusion here?
No, sir.
No, sir,
No.
no confusion
No.
here.
Now you will be paying 5 lakh. That's your out of pocket. You are paying 50,000 installation expense. That's also your out of pocket. But if you buy this new machine, you will have to pay 5,50,000. But there is already a machine which is of no use for you once you buy the new machine. So what will you do with the old machine? You will sell it off in the market.
Okay, okay, sir. वहाँ
And a
capital
best
gain हो रहा है.
and a best estimate is that it will give you rupees 1 lakh inflow. So out of the 5,50,000, 1 lakh has been arranged by selling old machine. But 50,000 was its book value and you are selling it for 1 lakh. So you are making a capital gain of rupees 50,000. Hai ya nahi?
Yes, sir.
Now,
Yes, sir.
because there is a capital gain, you have to pay taxes. The capital gain is 50,000. You have to pay taxes, right or not?
Yes, sir.
Yes, sir.
And payment of tax is outflow or inflow.
Outflow.
Outflow. Outflow.
And what are you trying to determine?
Outflow.
Flow. Initial outflows.
So should it be added or deducted?
Added.
Yes,
So we
added.
added here.
Okay,
Got
sir.
it? Now let's
Yes,
compare
sir.
with here. Let's compare here. Now let's compare here. Book value is 10,000. And now it is the end of the life of the asset. So what will you do with the asset? You will sell it off in the market as a scrap? Yes or no?
Yes, sir.
What
Yes,
will it
sir.
give? What will it give? Inflow or outflow?
Inflow.
So what are you trying to
Inflow.
determine?
Cash inflow.
Cash inflow. Now by selling this asset in the market for 30,000, you are making a capital gain of 20,000, which will attract taxation at the rate 40%. So how much your capital gain tax?
8,000.
Inflow, outflow?
Outflow है. Taxes है.
Taxes. So now what are you trying to determine here? Inflow.
Inflow.
And what they are?
माइनस
Outflow.
कर देंगे.
तो माइनस कर दिया. I hope अब समझ में आ गया होगा दोनों का डिफरेंस.
यस सर. वो स्टार्टिंग में जो इनिशियल जो मशीनरी थी जो पुरानी थी हम जिसे सोल्ड करने वाले था, इस वजह से मतलब कैश कैपिटल गेन का नहीं समझ आया.
कोई इशू. अब तो समझ आ गया ना?
यस सर.
Can I proceed further?
Yes, sir.
So by now you have understood how to determine 3 kinds of cash flow: initial cash outflow, annual cash inflows, and terminal cash flow. You are able to now determine this. Now let me do this project evaluation now. And I will share this Excel sheet with you all through Pratibha. I have got Pratibha's number. Is Pratibha present right now? Perhaps not. Koi nahi. I will share it with through her. Okay. So these are the cash flows that are happening, and it is year 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Right? Terminal cash flow has been added over here. Generally, you will see in the books, it writes like this: 10 is repeated twice, and here it is writing 1,21,600, and here it writes 1,10,000. Just to show that this is your annual cash inflow and this is your terminal cash inflow. Hardly matters if both are happening in the same year. I can straight away write 1,31,600 instead of writing it in 2 figures. But in the books you may find it, so I just try to show you over here. Now, we have a few more information about this project, and the information about the project is the following. Number one, the discount rate is 20%. So this is the expected return from the project, 20%. Okay. What is your initial cash outflow? That also we have determined, and that is rupees 6 lakhs. This is your initial cash outflow. Now you have years, you have free cash flows, and there is one more assumption happening here जो आपको नहीं पता क्या आप assumption मान रहे हो. What are the assumptions here?
सर सॉरी, मेरा माइक चल नहीं रहा था, अभी आप बुला रहे थे.
अच्छा प्रतिभा.
यस सर.
कोई नहीं. Just tell me that I'm saying that we are assuming one more assumption here. We are making one more assumption here. What is that assumption? Can someone tell me what is the assumption? The assumption over here is that
सेलिंग प्राइस कांस्टेंट था.
नहीं वो तो हमने चेंज किया था. Sorry.
Sir, it will remain fixed or constant?
नहीं. The assumption is all
money
cash
value
flow,
remains.
all
Money value
cash,
remains same.
नहीं. If money value remains same, then why are you discounting? That's not.
Sir, like discounting rate is same in all the periods. Like ऐसा नहीं होगा कि second से third में जाते हुए कुछ और होगा और उसके बाद और होगा. सारे
That
periods का
can
हम same
happen.
लेंगे.
That can happen. Different years can have different discounting rates. That's also not an issue. The assumption that you are making over here is that number one, all cash flows are happening at a regular interval at the end of the year. Please mind it. You are making an assumption that the 77,200 is happening at the end of year one. ऐसा नहीं होता. That you are putting the money today and you will be receiving only at the end of year one. That may happen if you are making some investment decision like FD or something. But for all other manufacturing units, you keep on manufacturing, the cash comes in, keeps on coming in, and cash going out, coming in, going out. But just for you don't have to do anything here. But I just want to let you understand that you are assuming here, by default, you are assuming here that these cash flows are happening at the end of the year and the interval is same. So frequency of happening is 1 year, and that's consistently being measured. Right. Number one. Now, what are the techniques that you can use? अब मैं इन्हीं cash flows पे एक एक करके सारी techniques लगाता हूँ. सबसे पहले payback period जो हमने last year में किया था. कि if I have to determine payback period, what should be payback period?
Excuse me, sir.
For payback period, I will have to determine cumulative free cash flows. These are cash flows, right?
Sir,
Yes.
sir, in 10th year, it should be 2,31,600.
Yes, 2,31,600. Thank you. So this is your cash inflow. For payback period, I need to have cumulative cash flow. What is payback period? It is the number of years within which my initial investment will come back. What is my initial investment? Rupees 6 lakhs. It should come back. So let's calculate cumulative cash flow. How do you calculate cumulative cash flow? First year के end में 77,200. In the next year, the previous cumulative figure plus the current year figure. Now, in all, this project will give me 10 lakhs 90,080 rupees. 10 lakhs 90,000 and 80 rupees as inflow. What is my outflow? 6 lakhs. What is my inflow? 10 lakhs 90,000 80 rupees. Because the inflow is greater than outflow, there is a positive return in it. What is that return? We'll determine later. Let us try to do it one by one. First is payback period. What is payback period? How many years does it take to return my initial investment? So, what is the initial investment? 6. How many years it is taking to return?
7.
In 5 years, in 6 years, it is 5,29,000. In 7th year, it is 6,33,000. So somewhere between 6th to 7th year. Somewhere between 6th to 7th year, my payback period lies. So how do you determine it? The completed year. What is completed year? 6 plus. Now what is the balance amount? So the total amount that was required was 6 lakhs, out of which in 5 years, in 6 years, we have got 5,29,000. So the remaining amount we have to get from 7th year. So minus 5,29,000. ऐसे ही करते थे ना? Divided by what is cash flow happening in the 7th year? In 7th year, it is 1,03,600 is the cash flow. This is how you calculate your payback period. So 6 years plus whatever amount is the balance in 6 years divided by income of the 7th year or cash flow of the 7th year. So if you consider it, the answer here will be equal to 6.69 years. 6.69 years. So it will take 6.69 years for your investment to come back. Okay, let me find out what is the different measures, that is NPV. Now let us understand what this NPV is. The difference between payback period and NPV is a discounting technique that considers time value of money. Payback period is a non-discounting technique that does not consider time value of money. So time factor has to be there, and time factor is there because of the one assumption that we make, reinvestment. We assume that whatever cash flows are accruing, they will be reinvested. Whatever cash flows that are accruing will be reinvested. So if they are reinvested, the cash flow happening here and the cash flow happening here are not same. So for NPV, we don't need cumulative cash flow. I'm simply deleting it. Should I delete it or should I keep it? Tell me.
Sir,
Same thing.
अब आपको आता तो है, हाँ, you know payback period, so I'm not working on it. Okay. Now, what is NPV? Since NPV is a discounting technique and we discussed in compounding and discounting techniques in the first class itself, and I'm assuming that you understand discounting and compounding, right? If someone doesn't know, can please tell me and I'll take care of it. What is NPV, by the way? First of all, NPV is net present value, that's the full form, which is basically difference between present value of cash inflows minus present value of cash outflows. Right? So there can be one period investment, it can be one, the battery is down. Just give me a minute so that I can connect it with the PowerPoint. Just give me a minute. So we have NPV, which is present value of inflows minus present value of cash outflows. Now, what is present value of cash inflows? It is equal to cash that is happening in the year 1 divided by, now this is what discounting technique is. Now today's value is the present value. That's cash flow today, and some cash flow happening at some future date is a future value. So this happens today and this happens at a future date. And if you want to convert it to this, just give me a minute. A call is regularly. So now if you relate these two, the present value of cash inflows, that is the present value today, whatever cash flow happening today, if I multiply this with 1 plus return for n number of years, this is called compounding, and the result is that I will have future value that is happening at the end of year n. So I have some cash invested over here. I explained in the last class also, and I'm just repeating it because I shall be using it in all my future questions. So if I compound, this is called compounding because in the present value, we are adding back the return component. So this has two components. One, the present value of whatever cash flow is, and the return in it. The present value plus the return. Now, if from this cash flow, which is happening at the end of year n, if I subtract from this cash flow, if I subtract or if I reduce or if I remove this interest component, this ultimately becomes the present value. So what I can do, I can write it like this, that present value today is equal to, now by multiplying this with present value, I got future value. So if the future value is divided with this factor, I can get my present value. So this is future value or the cash flow happening at the end of year n, which is happening at the end of year n, divided by 1 plus r raised to the power n. Right? So if it is year 1, divide by 1. If it is year 2, then raised to the power 2, and so something like that. Now, if I can rearrange this, what is future value? Now, future value here is equal to present value, that's today, into This is compounding factor, right? This is compounding factor. Whether CVAF or CVF, whatever it is. But now, if present value are to consider like this, then the present value here should be equal to future value at the end of year n multiplied by 1 upon I'm sorry bachcho, actually regularly call was coming from the family, so I thought some urgency may be there, and that's why I just had to pick the call. I'm sorry for the disturbance. Right, so let's proceed further now. So this component here, this portion is called present value factor. Okay, so I can multiply any future cash flow that is happening at the end of year n with its present value factor for at the rate r% and for n years, right? So when you compound, you get future value. In that, you multiply the present value of the cash flow with its compounding factor, you multiply. And here you have the future value, and you're multiplying with present value factor to determine the present value. I hope you understood this whole expression. Now, if I have to determine the present value of cash inflows, how will I determine? It is cash inflow at the end of year 1 divided by 1 plus r raised to the power 1. So this is cash inflow happening at the end of year 1 multiplied by its present value factor, plus cash inflow happening at the end of year 2 divided by 1 plus r raised to the power 2. And this will continue, and this will continue for the nth cash flow. So the cash inflow of nth year divided by 1 plus r raised to the power n. Now I can write it in a which is equal to sigma I goes from 1 to n. I goes from 1 to n cash inflow of ith year. So I'm journalizing it. I don't know how many years. It can be for 1 year, it can be for 10 years, it can be for 20 years. So cash inflow of ith year divided by 1 plus r raised to the power I. हेलो, हाँ भैया बोला तुम कैसे हो? हाँ बहुत बुरी खबर है ये। मैं अभी कॉल करता हूँ भैया आपको, 1 मिनट अभी कॉल करता हूँ, अब पलट के फोन करता हूँ मैं आपको अभी। Okay, So this gives me the present value of cash inflows, right? How will you determine the NPV then? So everywhere, every time I will be writing NPV formula, I will be writing only this expression, that NPV is equal to, क्योंकि ये लंबा लिखने में time लगता है, so I'll not write this much of every time. I'll simply write this expression. But whenever I write this expression, you should, remember this whole expression here, from year 1 to year n. And it is sigma I goes from.
Sir, rather than using these formula, can we make use of the table as well?
Yes, of course, I'll do that. Don't worry.
Oh, okay, sir.
So now you can get it this that we have, but जब formula लिखोगे तो formula ही होगा ना वहाँ पे जब लिखना होगा formula तो. So cash inflow of ith here divided by 1 plus r raised to the power n, not n, raised to the power I, where I goes from 1 to n, minus initial cash outflow, minus initial cash outflow. So this is the ultimate formula that we people will be working with for NPV. Now see what is happening here. As you saw, this fraction is present value annuity, present value factor. So this can be said termed as present value factor for year 1, present value factor for year 2, and present value factor for year n. So every year's individual present value factors can be used to determine the present value formula, as suggested by who said about this? The table. Who talked about table?
Sir, Simran.
Simran. So rightly pointed out by Simran that we can determine it at the rate 20%. Can calculate individual present value factors. And if you calculate present value factor, how will you calculate present value factor? The present value factor is 1 upon 1 plus r, 1 upon 1 plus r, which is 20%, raised to the power year. So it is year 1, year 2, year 3, year 4, something like that. So these are the present value factors. These you can calculate these you can use from your table at the end of the book. So no need to calculate. At the end of the book, in almost all finance books, these values are given to you for 20%, 19%, 80%, whatever it is. Right? How did we determine the present value? The cash flow happening at the end of year n multiplied by the present value factor for that year. Just consider this. Present cash flow happening at the end of year n multiplied by the present value factor. So we can simply multiply and we can determine the value. Hanji.
Sir, I'm
So
not.
present value of cash inflow. क्या कह रहे हो please?
Sir, I have a doubt. वो जो आपने drawing में बनाया उसमें जो आपने red में लिखा है, this one NPV is equal to, sir, the red one. Yes, sir, PV is equal to FVN into PV, this one.
This one, yes.
Yes. Sir, I do not understand that.
I'm saying that if I have to calculate present value, the present value calculation goes like this. That present value of any amount, present value is always today, right? So present value of any amount is equal to a cash flow happening at the end of year n. That is, I written a future value because all the cash flows are future cash flows. So whatever future cash flow is happening at the end of year n, when you multiply by the present value factor, ये देखो ना यहाँ पे. What is present value? The cash flow happening at the end of year n multiplied by the present value factor. इसी को मैंने यहाँ लिख दिया है. That's it. That present value is equal to cash flow at the end of year n multiplied by present value factor at the end of year n for the end of year for the year end. ठीक है?
Understood, sir. Thank
So
you.
now you can use this and we can simply multiply these two to get the present values. So this multiplied by this gives me the present value like this. So these are the present values, right? अब of course manually compute करने में आपको time लगता, और क्योंकि Excel है मेरे पास तो I could do it earlier. So these are the cash flows that are happening, and these are present value of the cash flows happening in individual years. These are the cash flows happening for individual years. What is the total present value of cash inflows? The present value of cash inflow is equal to sum total of all these cash flows. Sum total of all these cash flows, which is 4,01,723. शायद 20% का डिस्काउंट रेट ज्यादा है. Let me change it to 10%. तो ज्यादा ही है इसका डिस्काउंट रेट. So the present value factor we will compute will also be by 10%. And here let me change it to 10%. Right. So total amount it makes is 6,22,000. I just made a certain change in a very small change in this basic question. Required return I reduced from 20% to 10%. That's it. Right. So we have got cash inflows that are happening different years we determined. We have determined the present value factors, and we have determined what is the present value of these cash flows. Okay, so ultimately we will have present value of cash inflow, which is equal to 6,22,532. What is NPV? NPV is equal to present value of cash inflows minus present value of cash outflows. So that means it is equal to 6,22,532 minus 6 lakhs. This means we have got NPV, which is equal to 22,532 rupee and 12 paisa. This is the NPV, right? Now, what is NPV? NPV is present value of cash inflows and present value of cash outflows. Now, what is the decision criteria? If NPV is equal, if NPV is greater than 0, that is positive. If the NPV is positive, what do we do? What do we say? Accept or reject? If NPV is positive, what do we say? Accept or reject?
Accepted. Accepted.
Why accept?
सर दैट मीन्स कि हम लोगों को फ्यूचर में मतलब ज़्यादा पैसा इनफ्लो आ रहा है और उसके लिए जो हम आउटफ्लो दे रहे हैं दैट इज़ मच लेसर देन दैट वैल्यू. और अगर नेगेटिव होगी एनपीवी दैट मीन्स कि हम लोगों को ज़्यादा आउटफ्लो करना पड़ रहा है और इनफ्लो हमारे पास कम आ रहा है, तो हम लोग उस प्रोजेक्ट में इन्वेस्ट नहीं करेंगे.
Okay, just hold on. So you are saying that if it is reverse, less than 0 मतलब negative, right? Less than 0 is negative, then we reject. Okay. Let us have a third situation where NPV is equal to 0. अब क्या करेंगे?
सर इसमें फिर नो प्रॉफिट नो लॉस हो रहा है, हमारे ऊपर डिपेंड करता है हम इन्वेस्ट करना चाहते हैं कि नहीं.
So basically we are indifferent. यही कह रहे हो ना आप?
Yes sir.
Can I say there is no return if NPV is 0 means no return? If NPV is 0, that means no return.
Yes, sir.
सर रिटर्न तो है बट उतना है ना जितना हमारा कैश आउटफ्लो हो रहा है, तो प्रोजेक्ट तो हम फिर भी एक्सेप्ट करना चाहिए बिकॉज लॉस में तो हम है नहीं।
नहीं, पर मान लो 6 लाख का मेरा कैश आउटफ्लो है और 6 लाख का मेरा कैश इनफ्लो है, तो आप कह रहे हो कि बस यही है, यही कह रहे हो आप?
यस सर, एनपीवी तो तब 0 होगा।
अच्छा, तो आप ये कह रहे हो कि इसमें मेरा कोई प्रॉफिट नहीं है, कोई रिटर्न नहीं है। मतलब मैं ये पूछ रहा हूँ व्हाट विद द पर्सपेक्टिव ऑफ रिटर्न, रिटर्न के पर्सपेक्टिव से ये क्या है? 0
0
नो प्रॉफिट, नो लॉस, नो
सर
नो
रिटर्न तो है बट सर रिटर्न है बट अगर हम उस पे प्रीवियस वैल्यू का फैक्टर लगाएंगे तो वो निल हो रहा है। दैट मीन्स कि हमें रिटर्न तो मिल रहा है फ्यूचर में, बट जो उसका डिस्काउंटिंग फैक्टर है वो उसका इफेक्ट को निल कर रहा है।
देखो, आपका आंसर ठीक है, लेकिन मैं इसको एक दूसरे पर्सपेक्टिव से एक्सप्लेन करता हूं। अब ये याद करो फॉर्मूला हमने क्या लिखा था, और इसके बाद मैं आज की क्लास को सस्पेंड करूंगा, ठीक है? क्योंकि कुछ बुरी खबर आई है हमारे होम टाउन से, सो आई विल हैव टू जस्ट accommodate to that. So I'll just take some time and then I'll fix. Let us understand, what did we say? There is some amount of cash that you are investing today, which ultimately becomes a future cash flow xn, which is x0 into 1 plus IRR, मतलब return, irrespective of the fact that what is your expected return. ठीक है ना? You don't know what the return of the project is. आपने कहा मुझे 10% चाहिए, so you divide it by 1 plus discount rate DR for nth year, right? What is NPV? So if you say NPV, then NPV will be equal to this present value minus your initial investment of rupees X, 0. Now look at this expression. पिछली क्लास में भी एक्सप्लेन किया था, आज भी एक्सप्लेन कर रहा हूं. This IRR is your return of the project, irrespective of what is your demand or what is your expectation. So return of the project. What is this DR? This is your expected return, which may be more or may be less than what the project return is. Now, 3 situations. If this IRR, which is the project's return, is greater than DR, that is your discount rate, then this whole expression will be this expression I'm talking about. This will be greater than 1, am I right?
What is DR?
Discount rate. That is your expected return. Right? So if it is greater than 1, this means ये भी x0 है, ये भी x0 है, और ये expression greater than 1 है. That means it will lead to a positive NPV. This will lead to a positive NPV. So please appreciate the fact that if the project NPV is positive, it means the return from the project is more than expected return. If your project NPV is positive, that means the return of the project is greater than your expected return. In other situation, if this IRR, that is the return of the project, when I'm using IRR, it means return of the project, is less than discount rate, this means what? This will lead to what? This will lead to this situation wherein
Less than 1.
this ratio will be less than 1, and this will lead to negative NPV. So why negative NPV? Because why negative NPV? Because the return of the project was less than the discount rate. The return of the project was less than the discount rate. So my expected return was higher and the project's capability to earn was lower. That turns into, it does not mean, even negative NPV does not mean, a negative NPV does not at all mean negative return. It means the return less than expected return. It may ultimately lead to negative return. There is a possibility. If the return is negative, definitely, but it doesn't necessarily mean that negative NPV return be negative. The return may be positive. Suppose the return is 5%. The return is 5%, and your discount rate is 10%. So your NPV will be negative, but there is a return of 5%. How do you determine this? Look at the cash flows. Suppose this first year cash flow was not 77,200, but it was 22,200. Now look at the NPV. Now your NPV is 27,000 negative, right? Your NPV is this minus 6 lakhs. 27,000 negative. Does it mean there is a negative return? No, not necessarily. Look at the cash flows. The total cash inflow is 10,35,800. Total cash inflow is 10,35,800. And what flow? 6 lakhs. Ultimately, you are getting more than what you are investing. So if you are getting more in absolute term than you are investing, your return cannot be negative. Your return can be negative only if this value is less than 6 lakhs. But the return involved here, the return included in this cash flows are definitely less than 10%. That is why your NPV is turning into negative. I hope this logic is clear to everyone. The third and the last situation, if IRR, I hope I'm clear, right? If this IRR equal to discount rate, then this expression here will be equal to 0. This does not mean no return. This means return here, but the return is exactly equal to the expected return, and that is why it is leading to this expression will be equal to 1 side. This expression will be equal to 1, and that will lead to 0 in 0 तो हो नहीं सकता ना भाई division में. So this is about it. I'm sorry, आज मैं आपके क्वेश्चन ले ले पाऊंगा, कुछ थोड़ा some issues there. So I'll take it in next class. Keep your questions with you, and the same question I will continue in the next class. And the same question I will explain different concepts of NPV, IRR, and other concepts. Okay. So today I will take a leave now. Thank you very much.
Okay, thank you, sir.